Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Adobe. We are doing a stock review every single day, so make sure you guys stay tuned, hit that like button, subscribe. If you have any questions, ask them down below. And guys, we do have a whole bunch of new merch, and it's GTFM. And you might be saying, well, Carter, what does that even mean, right? I see it on your shirts. What does that mean? Get the blank in money. So make sure you guys check that out. Super cool stuff. But looking at this chart, you will notice that Adobe is very volatile. Pretty much what this means is the stock has gone up and down at pretty rapid rates. It's gone from about $400 all the way up to $700, back down to $400, and then kind of sold off down in here to lows at about $350. Now, the reason why we've seen so much sell-off, from this stock is just because the general market has been selling off. And any time you have just the general market selling off, you'll have stocks like Adobe, Tesla, and a whole bunch of other growth stocks sell off more than the market does. And on top of that, guys, the 5-year return for Adobe is 177%. Comparing that to the market, which is about 66%. So the thing is in times of bull markets, you're going to make more money off Adobe. You're going to make more money off your growth considered stocks. And in recessions, these are going to get hit harder. So meaning higher risk, higher reward. Comparing it to the general market, which is more of a conservative, less aggressive approach to make money. So looking at the chart, you'll notice that it does have, some decent support right down in here, at about this 380 mark, right? It hit it a couple times. We've had some consolidation here, and we've also had an earnings report. The earnings came out and they brought in about $4.3 billion, which seems like a ton of money. And it actually is beating expectations on the revenue and the earnings per share, which is beautiful, right? The revenue is up about 14% this quarter, which is, give Adobe a round of applause during all of the volatility, all the high inflation, high interest. Adobe's still doing pretty decent. And personally, I think that with this stock selling off, this just brings more opportunity to buy in at a more affordable pricing. Because if that's just say this earnings was really bad, yes, it would make sense for this stock to continue to sell off. Looking at this past earnings here, $4.2 billion. Looking at this earnings right here, another green, another profitable and beating expectations earnings. The only reason why we're having sell off is because of that general market selling off. And guys, anytime you guys invest, you have to look at a couple of things: cash on hand and long-term debt. The reason why this is so important is because if Adobe ever goes through a tough time or hard time, they're going to need to pull from that cash. And they have about $5.2 billion in cash. Comparing that to the long-term debt, which is only about $3.6 billion, they have enough money to pay off their long-term debt and continue to grow the business if they ever go through a hard time, which is beautiful. And another thing you have to realize is you want a stock that has pretty high profit margins. And Adobe has very high profit margins because it's a software company. Software companies make a ton of money, right? They have a very low overhead because everything's all online, and their profit margins 29%, meaning for every $100 they bring in, they profit $29, which is fantastic. Comparing that to Apple, which is about 22%, comparing that to like Tesla, which yes has way more overhead, that's still at about 20% as well. Now, another thing you have to realize, anytime you invest, you also want to look at something called the price to earnings. So this is pretty much a financial tool that a ton of investors use to get a gauge at kind of where the stock is, comparing it to their most recent earnings. Looking at this here, we're on ycharts.com. We will notice that right now, the last report for the price to earnings here is at about 40. So looking at this, looking at Y charts, you will. So looking at the looking at the price to earnings ratio right now, it's at about 40.05, right? This was the last time they so looking at the price to earnings right now, which is at about 40. So looking at the price to earnings, which is right at about 40, comparing that to the most. So right now, the price to earnings for Adobe is right at about a 40.05. Now, a lot of people like to say, Carter, that is way too high. I only invest in the stocks that have, a price to earnings under 25 or even 30. And given that right now this is a 40, this is a growth stock, right? This is a growth stock. They're going to have higher earnings. You're going to be paying a premium for this stock in most cases. But 40 for this stock is pretty decent. The average is at about 50. So right now, this is classifying this stock as undervalued, which is fantastic. This is what you want to look at when you invest, right? So meaning, should you buy Adobe stock right now? Personally, I think it has a ton of long-term outlook. In the next 2 to 5 years, Adobe is going to be absolutely killing it if they just continue to grow, innovate, and do what they've always done. I definitely think Adobe for me is an absolute buy. I have been buying this stock for years, and I am not stopping anytime soon. And yes, we've seen sell-off from this stock. I just think that this is just because of the general market selling off, and we're having a lot of continuation from that follow with Adobe stock, guys. So that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe. If you have any questions, let me know in the comments, and we will see you guys later. Remember to stay happy, guys, stay positive, and we'll see you later. Take care.